Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar's lack of follow-through appears to have stalled just shy of the 71-cent handle, and resistance capping around this region for now, although the broader tone remains constructive, could see a short pullback before the next rally. With the US markets closed on Monday for President's Day, the subdued start looks more like consolidation than reversal, as investors position for key catalyst data ahead, which could see the RBA minutes may fine-tune expectations around further tightening, but are unlikely to deliver any surprises. While the FOMC minutes and the Fed's preferred inflation gauge, the PCE index, later in the week could sharpen views of the timing of Fed cuts, keeping the Australian dollar sensitive to global dollar flows, that is. Against this drop back, the US dollar has gained slightly to recapture the 97 handle, but overall, I feel that the market, once this pullback is seen, as the technicals have broken down and may continue to, look towards that 70.35 level in case we get a bounce, or reassess, just in case the bulls are likely to not surface. If we do get a bounce, then we look back to 71 cents. Turning to the euro, a weaker play coming in and now looking towards that support of 118.35. A break there could give further extension down to 117.60.65. It is thin and therefore the market will likely to be sharp and whipsawed. Nevertheless, beside the US release and the FOMC minutes, we also got Eurozone's flash PMIs that could signal on growth. Overall, though, the technicals on the RSI and MACD have broken, so let's see if the weaker play continues into today. Well, again, the market is still remaining above that key area around 151.5, and presently not showing any bullish bias due to the lack of momentum. Therefore, I am still bearish and I still look towards that bottom side of the range that comes in around 151 to 151.5 and reassess. Sterling also a little bit weaker, but not so much as the euro or the Aussie, so it may hold up above its key level of 135.80.90 and then possibly see a bounce back to 137.5. Technicals have broken down for gold and therefore could see a sharp dip. The support comes in anywhere from 4,650.60, and let's see if the market can find any demand in this zone and recover back to 5,100 to 5,200. Turning to oil, the market has rebounded from the key level to $62 a barrel and now looking for a position to rally on to $64 to $66 a barrel and reassess from there. Technically, the indicators are in a prime position, so let's see if we do get follow on to the upside. Well, that's a wrap. Thank you for joining me, and as always, we'll have the intraday report. I hope you enjoy the great start to the day.